Hey Don, hey Jill, Brad here at Caliber Home Loans. I hope you're doing well on this Friday. Hey, I want to send over a little update on interest rates on the kind of purchase scenarios or purchase price scenarios that you most recently sent me, and just give you an idea of what payments look like and some other details of this home ownership possibility and kind of the benefits of that. So if you take a look on the top left section under summary, I've got four different scenarios. The very first two columns are condominiums. So again, a 630 and a 650 purchase price on a condo. I know that was at the higher level, of course, but again, just basing off your email on a request for what rates and payments look like. The interest rate for condos, keep in mind, are 1/4% higher than a single family, for example. So today they're at about 4.5% on a 30-year mortgage. Down below that, I've highlighted the payment on that scenario, that first scenario there, of $43.53. That does include your principal and interest payment, your monthly taxes, your insurance, as well as the monthly mortgage insurance. Now, obviously, we want to get you out of mortgage insurance as soon as we possibly can. So once we get maybe another 5% in equity, we can look at refinancing you down the road after you get into contract, of course, and we build some equity and have a 10% equity position in the property. So anyways, below that you've got tax benefit. Now this is a combination of the interest write-off as well as property tax write-off that you have for home ownership, which is pretty substantial compared to paying rent, of course. And then we've got cash to close on that scenario. I've estimated about $50,000, and the 650 purchase price, you can see there, payment slightly higher again, and cash to close slightly higher at $51,000. Now the next, or the third column over, is a 630 single family residence. So again, same purchase price, just single family. Rate is lower by 1/4%, therefore payments are lower, and cash to close is very similar. Now something a little more exciting about home ownership and building wealth in owning real estate. If you take a look at the bottom right bar graphs, the green bar graphs there, it says net worth in 10 years. These crazy figures here show that if there's a 3%, just a modest 3% appreciation in home value, continuous for the next 10 years, and you continue to make your minimum monthly mortgage payment, you'll have $367,000 in net worth, meaning in equity in your property in a 10-year period. So that's a pretty substantial number, because I don't know too many people that can save that kind of money in 10 years or even a lifetime for that matter. So I want to point that out, that again is if you make your standard monthly mortgage payment, but if you made additional monthly payments or towards principal, say an extra $100 a month or $200, etc., that would obviously build more net worth as quicker, and also you would pay much less interest over the term of that loan. But we can talk more in detail about that. I would love to meet face to face here with you guys soon as you continue your search for property. So again, keep hope alive. I'm sure the Katie team is going to rock and find you the perfect property. So please hit me up if you have any questions on this video or in general. And make sure that we answer any questions before you actually get into contract, because I know it's just a matter of time for you guys. Have a super weekend. We'll talk to you soon.